Hi everyone, Tom Gentile. Welcome to Tom's Trading Room. Glad to have you here. Here's what's happening for the week that ended October 2nd, 2015. So before we start with where we see the market moving over the next week, I want to spend just a moment letting you option traders know, those of you that are members of our trading room, that we have some new color-coded option trade searchers. And if you go to our option trade searchers, you can see all of our searchers here so that you can search on your favorite option strategies to your heart's content. All right, that being said, let's talk about the markets. So, first thing I want to show you here real quick is a chart of SPY, the S&P 500 depository receipts, and more importantly, what happened on Friday. Friday was a much bigger report than we ever expected it to be. In fact, in the pre-market hours, we were up double digits. Within a half an hour after the market opened, we were down double digits, and we ended up closing near the highs of the day, up double digits. Crazy day, outside day, and I want to take a moment to repeat something that I said earlier in the week. So earlier in the week, I sent out an email to my entire database talking about reasons why I thought the market was likely to have put the bottom in place already. And we talked about technical reasons. We talked about fundamental reasons. We talked about seasonal reasons. There's one more reason I want to mention to you, and it's right here. That B, that is a darknet contrarian buy signal that happened 2 days ago. And so, again, another signal that's telling us that even the contrarians believe that we're looking for some short-term moves to the upside in the overall markets. Now, I had mentioned fundamentals, and I'm going to get to fundamentals in a moment, but this is the same thing. This is part of an earlier print that I sent out, and I discussed not only the last 20 trading days, this is the last 20 trading days of the VIX, but more importantly, I want you to feast your eyes on this red line that's moving up and down, and over the last several days has been moving quite a bit lower. That is the 7 to 30 day at-the-money implied volatility, which has been dropping quite a bit here in the last week, because volatility is now coming out of the markets, telling us once again that we are likely to move to the upside for the short term. All right. Now, what's going to carry us there? Well, I've been thinking about this, and one of the things that I believe is going to carry us there is our third quarter earnings. Third quarter earnings are what I believe the markets are going to start to turn their attention to. Maybe we won't think about China so much. Maybe we won't think about India so much. Maybe we'll start thinking about Netflix and Google and Goldman Sachs and the companies that are due to report their third quarter earnings over the next several weeks. All right, this is just a chart, a snapshot of the first 5. All right, Costco's already out the door there, but we see that we've got earnings coming out for Monsanto, Netflix, Google, Goldman Sachs over the next week and then into the following week, into the middle of October. Now, this isn't the earnings that I'm most interested in. What I did was I took all the data that is in Tom's Option Tools and we resorted it, and I want to show you some stuff that we came up with. The first sort I did was looking at earnings where companies have either met or beat their estimates. Their actuals were greater than or equal to their estimates. You can see in the gold chart here, I took the top 10 stocks. These 10 stocks, when I rank these, are 8-0. That means their last 8 quarters, they have outpaced the estimated earnings. All right, that means their actuals actually beat their estimates. Priceline's up there on top, and you can see all of our favorite stocks: Baidu, LinkedIn, Apple, F5, Gilead, Amgen, Celgene, Disney, UTX. All right, they're all ranked there, but they're only ranked by which ones had the most actual earnings that were greater than or equal to their estimated earnings. All right, we got to do a little bit more work. So I researched and ranked again, and I took those 10 stocks and I re-ranked them. And this time what I did was I re-ranked them by which stocks had the biggest price change after that earnings announcement. So what I was looking at was I was looking at those stocks that had beat their estimates and I wanted to see what the stocks did after that earnings announcement came out. And what I found was a little depressing, all right? I didn't find what I thought I was going to look for. I was looking for stocks that were going to have those single to double-digit moves after earnings. What I found was LinkedIn, for instance, had a 14.46 average move, but it wasn't up or down. It could have been up one time, down next. The most recent quarter, we had a 12% drop in the stock. Before that, 21% drop. Before that, a 15% rise, and before that, a 14% rise, and it just goes on and on. And if I look at Priceline, I look at Baidu, and I look all the way down, I see this happens in every single stock here. Sometimes the stock went up after earnings. Sometimes the stock went down after earnings, which leads us to know that even good news can be bad on Wall Street. So I wanted to do the resort one more time. And I thought to myself, let's look and see what stocks move up in the week before earnings. So we did that. And here's what we came up with. And this is all data that if you log in, you can go to earnings rankings and you can go to earnings effects and you can get all the charts I just showed you. All right. So I have Priceline highlighted. The reason why? Priceline moves up 5.5% on average during the week before earnings. And if you notice here, 6, 3, 7, and 6, these were all positive numbers. Now, I noticed some of them coming down, like Baidu had a negative number, LinkedIn had a negative number, but here's some ones that I did not circle in red that I want to point out to you right now. Apple had a 2.67% increase on average in the days leading up to earnings. You can see it right there. The last 4 quarters were positive. Amgen, last 4 quarters positive. F5, last 4 quarters positive. Disney, last 4 quarters positive. These mean percent changes are based on the last 8 quarters. What you see in front of you is the most recent 4 quarters, all right? The reason I have Priceline circled is because it's near the top of the list as to the best close percent change to the positive, where the last 4 quarterly earnings had positive moves in the stock. This was before earnings, all right? So be warned. When you're looking at something like this, what's going up? Not only the price of Priceline is going up, but the implied volatility as we lead into earnings is most likely going higher too. So there's a lot of folks out there that believe that the earnings are going to be very big and could drive the stock one way or another very big after earnings. All right. Big takeaway here: buy the rumor, sell before the news. All right, guys, and that being said, that ends our video for the week. You can get my full market outlook online along with trade alerts, and talk to us on the forums at www.tomsoptiontools.com. Have a great week, and I'll speak to you soon.